Hi folks, it's Adrian CryptoBirb speaking. Welcome to today's Friday webinar. Best greetings from Portugal, from Medis at a beautiful sun, beautiful ocean coastline, actually right here in the village of surfers. And well, the best of love to everybody who's watching that. If you're watching that on YouTube, well done, because what we are about to hear is potentially going to change your mind for the next days, weeks, and months ahead. Stay tuned, we're going there right in a second. Very well done, everybody. Hi. Let me know how you guys are feeling today. Drop some comment, drop some note for where you're writing from. What's the weather up like in your location? There's Alex joining. Hi, everyone. Hi, Alex. Back to you. Good to see you. Yeah, and there's a lot to be discussed, to be honest, right? This is a crucial Bitcoin update, and we're going to have a nosedive into the Bitcoin's chart analysis among the other charts, right? Because Bitcoin is an asset class. Bitcoin is, well, a price asset in a way, right? It's just a class of the financial markets. It's not a separate being. It's not isolated. It trades along. S&P 500 trades along. Stocks trades along. Commodities, etc. Right? So it's not isolated. And because it's not so much isolated, arguably we're looking again at an overall condition, that one market correlates with another more strongly, less strongly at times, depends on the occasion. Let me know, guys, if you can see me, hear me clearly. There might be some internet connection issues on mine, so please let me know if I need to clear it. If you can hear me fine, it's good. There are good evening from Thailand. Good evening, and big love saying all the way back to Thailand. Hungary, weather is bullish. I love Hungarian friends, very good people. There you go, Vixita. Hey, buddy. This is an amazing flag. I love this. Let me know your location. Actually, this is pretty interesting, right? I've seen this flag many times. However, we do not see too many people, I think, joining from your country. So it's pretty interesting. If you don't mind sharing with your friends in the comments where you're coming from, it would be probably enlightening to see many more nations joining. So it's good. Ricky Garcia is joining. Hey, there we go. Alex is from Romania. Good to see that. Excellent. Very good. Gents, listen, ladies and gentlemen, this is Adrian Zdunchik again. I'm CryptoBirb. I'm here to tell you a couple of nice things, regarding Bitcoin, right? However, like I said, it needs to be positioned within a broader context, right? Otherwise known as intermarket technical analysis. The introduction of this concept of the school of thought came in also and it was pioneered, was publicized, if there's a word like that even, was given much more audacity, basically, with the help of John Murphy, right? John Murphy, the college Swerve, who basically designed one of the technical analysis for 20th century and beyond, right? We're talking about John Murphy, the technical analysis of financial markets. So it's pretty interesting. And I will keep looking back and forth a little bit, to my mobile to see about the connection. If there is any interruption, just let me know. Again, I want to see and be fluent with you guys. So we're about to head out and dive into some charts, right? So start off, we're talking about the most recent Wednesday's print for CPI, which came in lower than expected. Expected as estimated 3.1% year-over-year average change. Percentage, for June 2023 versus June 2022, right? So here we are looking at a curve, and this curve is basically representing the 12-month percentage change in CPI, which is the blue curve for all items, right? So it's a heavy drop from May, 4%, right? Year-over-year average, from previous 5% from April, right? Not to mention June 2022 and the inflation, all CPI inflation was 9%. Right now we are back to 3, right? So it's a heavy 1 percentage point drop. So it's significant, it's important, and it's a heavy drop. This, ladies and gentlemen, is inflationary, or should I say, or disinflationary, right? In fact, because we've been looking at this overall quantitative tightening, position and viewpoint stance, from the from the FOMC, from the monetary policy viewpoint, and that the goal was to reduce the inflation, right? Was not to cause the deflation, right? Was to actually just disinflate the market a little bit, disinflate the economy. And it seems that they've just perceived to do it. They seem to have done it pretty well so far, arguably, right? So we're still not at the target rate of inflation of 2%. So there's still time to be taken, and most of the rate hikes are probably not yet priced, or I should say discounted by the business, right? Because CPI is a result, it's a lagging indicator, right? It's not a leading indicator. It's something that the FOMC can only look backwards, in hindsight, and see, okay, it's backward looking, so it's not going to tell you so much about the future. It's telling you much more about the actual past. And still, it's a source of valuable information. So it's declining fast, which helps provide a little bit more relaxed view, a little more dovish viewpoint and stance from the monetary policy eventually, which is, well, inflationary on its own, right? If you think about it long term, because, well, the markets thrive on stable inflation. They want to keep the inflation at 2%, right? However, of course, there are some unpredictable events, like with the war and the energy market at that time, started crashing the markets, started taking away, all the liquidity from the other assets, from the risk assets, and was the best performing asset from 2022. Right now, it's flipped. It's actually one of the worst performing assets, right, and the asset classes. So again, arguably, we are improving, right? And the improvement in the economic sense, even though we still may face the recession, is a good thing for the market, right? However, remember that the markets lead the economy by 6 to 9 months. So what's happening inside of what you're actually seeing in here? What you're seeing in here, had already happened 6 months earlier. It happened 6 months earlier, 6 to 9 months earlier on the stock market. And this is just a reminiscence. This is just an effect and impact of this, right? So it's important to take it as we go. However, it's improving. It's improving. The overall outlook is that the major markets are in the green, like a little bit of a 6 to 10, arguably here, right? We're talking about the 6 in the green and 4 in the red. However, there are no big numbers, right? You can tell there are 0.7%, 0.5%, minus 1 for AMX up here, minus 1, almost 0.5, minus 6.16, right? So there's not significantly big numbers. It's a rather low volatility day, as the Dow Jones Industrials is basically right there, pushing towards the previous resistance area, right? So this previous resistance area is significant. It's significant from the perspective of, again, not so much. So this is an index, this is an average, right? That just discounts the available information. So it's not so much respected and recognized as a tradable asset, right? Of course, there are some instruments to bet on that. However, what matters is that it averages out information. And because it averages out information by observing the long-term trends, just like you could see the 200-day average for how the things change over time, we're kind of like in a declining mode for the whole of 2022. It got flattened over 2023, and we are now moving upwards. And this upward trend tendency is accelerating, if you can tell, right? So we are moving in a more and more accelerating environment to the upside on average. You can also tell that there's definitely 52-week high or even more, yearly highs for the digest transportation, which is consumer discretionary object of interest, and you can only afford durable goods and big expensive cars when you have money. And at the same time, you could only buy big expensive cars and durable goods, invest in your own goods, anything over the basic necessities, when you feel fine, fair, and certain about the future, right? So it's also by observing those movements. You can also tell about how the future is perceived by the consumers out there. So it's in bullish, it's inclining mode. It's good, right? So the Dow Jones Industrials may yet to catch up, and the disparity. The best situation is when there is no disparity between the Dow Jones Industrials and transportation. However, transportation often tends to lead the industry, right? It tends to be the original pump, if you will. S&P 500 broke above 4,500 milestone, the highest record since, if I'm not mistaken, March or April 2022. So again, another record. Such things, when you think about it, 52-week high, 60-week high, those happen only once every 52 weeks. So you had to wait for a year to get the S&P 500 to a point where it actually prints new records. So that doesn't happen too often. You have only a 1 to 365 days of a chance, right? That it's something like that happens. So if it happens, and it happens consistently, right? Because you continue to see that S&P 500 shows strength, that the average, the 200-day primary average, improves, showing you the accelerating tempo of a trend. This is bullish. We keep printing new highs. We keep defending the lows. The accelerating bull market trend is speeding up and sharpening up, right? So it's bullish. We are bullish. We are bullish. S&P 500 sectors, the top performing one is technology, almost 43% year to date. Then right behind it is communication services, so 40% up to date on the stocks, right? And we've only been 6-7 months here into the year. To consumer discretionary, which is powerful, again, driven. This is the bull market cyclical, ETF, kind of like a class for consumer discretionary, that only move with the bull market direction, and only moves well in the bull market, and it continues to dump in the bear market, right? So right now, it basically, again, there's a huge disparity and a huge, again, time travel, if you will. Here's a 30-40% performance, and the next one is industrials, and this is only 11-12%, right? Right up there is materials, and right below is real estate. So we have all the interest rate sensitive ones are also doing well. However, the biggest underperformers are healthcare, utilities, and the energy year to date, right? So those are the three biggest losers. So this is, ladies and gentlemen, this is how a bullish market looks like. XLY versus XLP, yet another new high made. Ratio is inclining, right? The ratio has turned. 2023 has been this turning point, just literally like you take a magnifying glass, and it's up there, right? So 2023 came in, and all the bearish headwinds basically evaporated, right? The relative strength ratio showing you the ultimate preference between the XLY and XLP, right? Shows you that XLY versus XLP ratio in inclining tells you that there's an ongoing increasing and strengthening preference and choice among investors to pick more risk-related assets than the safer bets on the consumer staples, on the basic goods, beverages, etc. So there is an appetite for risk, which persists and improves and strengthens over the time, and we continue to make new highs. And it's the highest it's been, I think, in 63 weeks, if I'm not mistaken, or even more, right? So it continues to perform strongly, and it's up there. So it's good. It's really good. It's really good. Let me know, guys, if you can see and if you can hear me still well. Drop some questions if you have any. I'll do my best to answer some of them, at least right after the chat or right after the stream, or sit down with my team to work on that for you. If you're watching that on YouTube, make sure you hit the subscribe button, smash the notification bells on to stay notified every time we put out a new content like that. And there is so much coming in this year. We're pretty incredibly excited for that. You wouldn't believe how much is happening. And the Birb Nest has been saving CryptoBirb since 2017, and we're only getting better, stronger, and faster with it. So get yourselves buckled up, because 2023 is a year of the winners. And if you're watching that, again, congratulate yourself, because you're one of them. You're one of the winners. You're early. We are literally starting the bull market. We have started the most bullish odds for 2023. 83 to 84 odds over 84 years, that pre-election year bullish market is there. So we have 98.8% of chances that this year closes bullish than it opens, aka it refers to it as a bull market. It advances, it gets stronger. We have extremely strong positive seasonal record for this year, right? We are right ahead in terms of Bitcoin, ahead of the halving, which typically and historically have always driven prices up, significantly accelerating the bull market. So we are in the most bullish conditions you could ask. You are the early pioneers of this bullish cycle. So well done. Let's rock it into Fedder, the energy, right? The energy is pulling back the new the relative strength ratio. Again, it's a very interesting study that has also been put much focus on by John Murphy in the anti-market technical analysis studies, where relative strength ratio helps you categorize and rank the investments, right? You can pick the best performing assets and drop the worst performing assets. And by observing the relative strength ratio XLE versus S&P 500, like I said, the third biggest loser this year, you're watching a continuous decline in the preference. The relative strength ratio continues to decline ever since 2023 started, right? So we know that there is increasing number of traders who do not prefer XLE energy anymore. So it's cooling off, and the previously lasting 2-3 year bull market might be potentially flipping, right? Because we had just spent 60 or 75 days, if I'm not mistaken, 70 days approximately, below the 200 average for the first time since the bull market started, right? So we're looking at this early reversal stage reasons. It's of course still trending up. It's super well. It's not trending up anymore. I would say you should excuse that. It's actually moving sideways, right? The average. I was referring to the average, which continues to move up slightly and slowly. However, it slows down more and more, right, over the time. So we're looking at the frames of a horizontal pattern of some sort of rectangle or whatever that is, right? Doesn't matter too much, because what it tells you is that the trend is not inclining. It's not moving upwards anymore. The energy is moving sideways at its best, and it's just showing the signs of the bearishness unseen since the bear market, right? So arguably, again, the more of these populate, the more of these you see, the more time it's willing to spend below the 200-day moving average representing the primary trend, the more likely you're looking at a major bull market reversal to the downside, right? And it often happens that, again, since we got a series of new lows in the relative strength ratio, it often shows you the future a little bit, right? You can use that as a leading indicator, because if there is an increasing amount of traders who do not prefer energy anymore, the energy will start lacking demand anytime soon. And if it does so, and if it actually does start lacking the demand, there are no buyers to step in and support the prices. Hence, the prices have better chances of continuing sideways or moving downwards. It's definitely not helping move upwards, if you know what I mean, right? So declining energy prices means more disposable income in your pocket, more money that you can spend on whatever goods you want. This makes the economy thrive, right? Because eventually you give money for all the goods, for all the services. Then it creates the job market, it strengthens the job market, and strengthens the entire economy. It gives the revenues and returns to the firms, to the businesses, and that translates to better price action eventually, right? So improving economy is positive and constructive for the markets as well. However, it's the markets taking the economy out of the recession, right? So the best performing asset of 2022 is actually right now on the top in the third worst performing asset this year, ever since 2023 started. And it's been moving sideways or to the downside for the whole time on average, right? So the big movement is actually withdrawing attention from the energy so far. And if it does continue to do it, again, more money that you can invest and spend in whatever way you feel, also by investing in assets like Bitcoin. And guess what? Cheaper energy prices are bullish, because eventually that helps miners retain the profitability. They are more profitable, there are cheaper energy mining costs, right? So it takes basically less money to cover the energy and electricity bills, right? It is bullish on its own because it encourages investors and traders to mine, right? That helps facilitate the network better, make it more liquid, etc. So it's bullish. On top of that, this translates to bullish year 2023, since the breakout over $20,000, that we had up there with the 200-day moving average. This is, ladies and gentlemen, a Bitcoin trend. If you erase and disregard all the price action, because eventually it's irrelevant, it's full of noise, you don't need to even look at it. What matters is the actual price trend. This is the black curved line. This is the 200-day moving average, the primary trend of Bitcoin. The primary trend, so you don't need to watch and observe the price bars. You probably should only trade in the direction of the trend. The trend is your friend for a good reason. A trend is like a speeding truck, full of speed and full of mass, right? When there is a speeding truck coming right at you, you probably better move aside, right? Rather than let yourself run it over. So if you try to counter trade such powerful trends where Bitcoin pushes from 15,000 all the way to over almost $32,000 in a matter of 6 months, it's basically performing 100% upwards, 100% to the upside. And we're talking about 500, 600, 700 billion market. So it's impossible for the market to go up and persist for 300 billion surplus when compared to the earlier this year by accident. It's impossible for someone to invest 300 billion of dollars in Bitcoin and not notice that, if you know what I mean, right? You just don't spend 300 billion, whoever that is, collectively in an aggregated form. You don't spend 300 billion dollars on an asset without knowing that. It means it's purpose. It means it's not accidental. It's not coincidental. It's full of purpose. It's full of trend and persistent price movement that continues to accelerate more, better, faster, stronger. Okay, and we're continuing to make new highs. 31K made earlier this year in April, right? March, April period. Now it's kind of 31.800s, right? So new highs made. The trend is accelerating. 200-day trend is your friend. It's not my opinion that the bull market is here. This is the bull market trend. So it's not my opinion. I'm commenting on a fact here, ladies and gentlemen. This is a fact. I'm stating a fact. The line is moving up. And if the line is moving up, that represents a bull market or a bear market. This is bull market. This is not my opinion. This is the line going up. This is the bull market, period. There's no room for discussion there. Anyone basically rejecting that reality is putting themselves in the 2022 bear market frames. And I know people who got stuck in the past and they continue to look back at 2023, look back on 2022 and say, hey, this is the market, the bearish market dumped so much. Yeah. But guess what? It doesn't matter because we're not living in 2022 anymore. We're in 2023. Wake up, right? Wake up. We are not supposed to live in the past. We're living in the present. We're living right now, right? And we're focusing on what's on the future. And we're living in 2023, and the 2023 has been nothing but moving upwards this year, right? And again, 300, 600, 700 billion dollar market cap asset is not moving by accident or by 100%, right? It's impossible that the capitalization, the size of the market increases by 300 or 400 billion, and it's due to the chance, right? Because someone snapped or passed out and knocked their head on the table and by accidentally bought $300 billion of Bitcoin, right? Things like that don't happen. So yeah, the BPRO baseline trend is actually even more aggressive right here. It's showing you even more sensitive price, right? Because when the SMA 200, the simple moving average, gave you a buy signal approximately in March, right? The BPRO baseline actually was far more sensitive, and it gave you the buy signal, the breakout signal earlier, 3 months earlier, right? It gave you two months, 60 days of advance to buy Bitcoin cheaper, right? At $17,000, $16,000, $20,000 versus the actual 25 or 22, 23, right? So we're now moving in a trading range sideways, following the significant breakout, right, of a correction that lasted for 2 or 3 months up there. The trends are moving higher. The trends are moving more persistently. This is, like I said, ladies and gentlemen, this is the Bitcoin trend. This is all you need. 2023 has been moving up. There is no the person in that is saying that is going to tell me that this line just goes down, because stating that the bear market, that 2023 is in a bear market, that would basically be you claiming that this line is going down, and it does nothing but actually move. It does everything but not move down, if you know what I mean, right? It just continues to move up. It just continues to climb higher, and this is a bull market trend. So there is not a sane person who would tell me that this is a bear market. That's not how a bear market looks like, ladies and gentlemen, right? So again, we're looking at a little bit of a local sideways, right? Following strong, powerful breakout of about 30%. One thing that I could argue is could be valuable and beneficial for the bulls is to have more volatility, because ATR, the average true volatility for technicians, for technical analysis, is basically moving flat. It's not strong, it's not persistent. So I would love to see more volatility so that the trend to the upside can flourish, can get more and more aggressive and get more space to the upside, right? So I would be very cautious overall with the summertime, because August, while July tends to be stronger for the second half of the July, we tend to see much stronger returns than in the first half. However, it takes us closer, inevitably, to August and September, which are 2 worst performing months on the record. September, on average, loses 10%. So averaged out over 13 years, right? So it's not a good idea to buy Bitcoin in September, to buy Bitcoin at the start of September and close the position at the end of September. right? That was the losing strategy over the years on average. So I would love to see more volatility, more breakout to the upside again, confirmation. Right now, it's kind of like chopping around. It's a little bit up and it's a little bit down. So it's just choppy, floppy, sluggish, and should have more fuel, right? Otherwise, we may fall into the slower market, right? So I may be wrong, of course, because I've been wrong 5,000 times or 10,000 times in the past 5 minutes, right? So do not expect any accountability from me for making wrong predictions, but I clearly state that you shouldn't trade with it, right? Those are just my thoughts. I may be wrong, of course. Do separate it from the facts. The fact is a bull market. What's going to happen? I don't know, right? So I'm not focusing on what's happening on the right-hand side. I'm only focusing on what's happening on the left-hand side because this already happened. This is a fact. No one can ignore that. No one can deny that, right? So I love focusing and looking back, as the technicians do, looking back and stating the obvious facts. The fact is that the trends have been moving up and the trends tend to persist, right? Whatever happens, on average, trends tend to persist. So I know that in the bullish year and the most bullish seasonal pattern that we could ask in 2023, we're most likely to continue this trend. It doesn't matter. It doesn't mean, however, we are going to only see up-only price action. Perhaps we are heading, right into the two months of some bearish price action. Maybe it's going to down. Maybe it will go sideways for the next 2 years, for the next 2 months or something. Just be mindful about bearish Septembers, right? Which typically translate to the most bullish quarter of 3 year with the best returns in October and November and December in such an order, right? So again, the averages often work as support. So if I were to make any guesses, again, do assume that I'm wrong about that or that I may be wrong because there's so much stuff that I cannot predict. So take it with a grain of salt. Do not invest in that and all this stuff, right? Just for fun, if I were to guess, then I would say that looking at this actual trend support at around $28,000, we love from numbers, might be a little bit of a point of reference. So if I were to give you any anchor, any number, I would say 28,000 might be your point of interest, might be your point of support, right? That if we actually get there, we may extend into this more sideways kind of like not persistent movement frame, kind of like a boundary for the more continued sideways thing until we get into October. So until that happens, again, be mindful of sluggish August that is fairly neutral, however, slightly to the downside, and more of a bearish bearish September. So we cannot guarantee anything to the future. However, that's a reality of the past 15 years on average, right? And the more data, the more averages, the more reliability the averages would have. So again, maybe we see something like that, but a little bit of a more bullish price action, just like what we do typically see in July, followed by some slightly negative or neutral August, probably a little bit more in the retracement mode, followed by more bearish price action in September, right, all the way until October, when it typically market continues to thrive, and then it pushes to the new highs in quarter four. That's the most typical thing that I could argue. You could expect. It's good to have some expectations. It's good to play a little bit with it yourself. However, you shouldn't trade based on opinions. You shouldn't trade based on guesses, because how many times in your life can you win the lottery? Can you expect to win the lottery one time after another? Can you win the lottery 10 times in a row? So of course not. You cannot guess the future continuously and be right about that, right? If it happens, it's due to lack, and mistaking lack for skill is a huge, inevitable sin and mistake that is going to inevitably put your money into failure. So system-wise, I'm running a position. It's going to be somewhere around 550,000, 560,000, whatever that is. Just go ahead and check it on my pinned tweet up there. The stop loss is still highlighted by the BPro trailers. We've actually released a new version of BPro, so there's gonna be some more info coming on next days and next week. So be tuned for it. Stay tuned. But for now, it's in a bullish mode, right? We're in the bullish mode. We're still moving bullish in a bullish trend setup. So until it gets canceled around, we're breaking below 29,900s or 29,400s, this provides you a little bit of a cushion of support based on the adaptive ATR technology up there, right? So the customly set proprietary indicators that we have on the BPro basically tell you that the bullish trend setup is valid until it breaks 29,984 or 29,423. So depending on what your time frame of interest is, right? So until then, we're in the bullish mode. On the lower time frame, 4 hours, we're slightly we're chopping around, right? Average again. If you this is what the Bitcoin price action looks like on average, right? So if you that's the trend. See how floppy, choppy, and sluggish it is, right? It just oscillates. It doesn't have any persistence in it. So we're moving in the side, and that's the trading range. So we're moving in a sideways trading range, and ideally for Bitcoin, if it maintains the 31,000 as a support, right, it's possible to have some, slumps and kind of like just drops below, slips below. However, it ideally closes above the 31K. Otherwise, I see a lot of reason for why it could drop to 30,000 or lower, right? So again, 29,900s or 29,400s are the levels to watch. And ideally, the question, altcoins or Bitcoin, I'd say that Bitcoin all the way, right? Even though there's, of course, no way to predict the future, we know that, again, there is, there is a way to refer to it again as from the relative strength perspective, right? So if we take a measure and a point of reference on August, last year's bear market rally highs, right? By the way, this was a bear market rally. Bear market rally doesn't last 7 months. It lasts a month or two and is strong, right? However, it doesn't last. This is not a bear market rally. Bear market rally is a upside correction in the bear market, not an actual trend. So there is a difference. So be mindful of the nomenclature and phrasing right there. Besides, again, taking into consideration the August highs 2022 right there, right? When we take it as a point of reference, Bitcoin is trading well above it. It's well exceeding the actual the bear market rally highs, while the altcoins on average as a whole total market cap without excluding Bitcoin are trading well beyond the below the August highs. Right. So what it tells you is that the altcoins are not only underperforming on their own, against their own performance, they're also underperforming even more heavily behind Bitcoin. Right. So that's a reality. You're not only not losing as in break even, you're actually losing on altcoins while Bitcoin is winning. So in light of momentum investing, you should long the winners and short the losers. You should long the strength and short the weakness. So we should probably portfolio management wise be overall oriented towards longing the Bitcoin and short the altcoins, or being spot neutral or even underweight, right? So having less altcoins and more Bitcoin is an equivalent of being short altcoins and long Bitcoin in a way, right? So you don't need to go futures, you don't need to go dodging, gambling, leverage, etc. In fact, I could never recommend that to anybody. However, what matters is that you want to have this principle of looking at it as a be strong, be long strength and short weakness, right? Be long where what's outperforming, which is clearly Bitcoin, and what's underperforming should be on the negative switch up there. So altcoins should be either in the minority of a portfolio, and Bitcoin in the majority. Right now, that's what it seems on average. Of course, it would need to be consulted with everybody because everybody would have different trade style, etc. Right. However, a typical average trader will do best if they hold on to the Bitcoin rather than to the altcoins, which are not performing well or are still on the losing, in fact, right? So take it with a grain of salt, of course, because it should be adapted to everybody's situation, to everybody's own lifestyle, to everybody's trading preferences, regimes. How much money you have, what your liabilities are. If you have a debt to pay off, every day, then it wouldn't be a good idea to trade in crypto at all, maybe. So that's it. Ladies and gentlemen, I appreciate you tuning in. Let me see real quick. Alex is saying not selling anything, keeping an eye on the bearish argument also makes sense. Bitcoin is a consolidation. Adnan is right up here. I don't like decreasing Bitcoin volume because of the holiday season. Correct. So typically during the summertime, people take time off. They do not spend time in front of the computer screens, right? So on average, you would expect people more likely to spend time outside playing with their family, somewhere at the ocean or in the, around the sea, going on vacation, taking time off, rather than being dead and trading in front of the computer locked in the basement. That's the reality. Translates to fewer traders on the markets, translates to fewer transactions, less volume, and less of the positive price cushion to support the prices, right? So it may happen that the prices may not develop upward tails and it rather focuses on sideways environment and actually almost downward trading. Lobo following since Dan. This is a good looking dog in your profile pic. Love this picture. And OG, that's an OG. Well done. Thank you so much for kind words. Jungle Blue up there. So I appreciate you tuning in as well. Ashton, my friend, Ashton Edison, everybody, huge, great friend, and a huge. I'm a huge fan of his Twitter person as well. So feel free to go ahead and check after Ashton Edison on Twitter. He's running also great Twitter campaigns and programs right here with his incredible brand. So yeah, that's about it. Listen, I think it's time to kind of like log out and log off before my internet crashes. So I appreciate your patience. Again, congratulations to yourself. Give yourself a round of applause, because by being here early, you're into the bull market. Just restating the facts, we're in the bull market. We are heading into a slower period of August and potentially bearish September, which may be time to reaccumulate, buy more Bitcoin eventually. However, on average, it's been best and it's paid off the best this year and this trend to be long Bitcoin more and less towards altcoins, right? Because you want strength and short weakness. This is the basics of technical analysis, right? You want to hold on to the winners and lose, which is biases. There's lots of, you don't want to hold on something that loses value. You want to hold on to something that makes you money. So if you guys want to get a little bit of fun, feel free to go ahead. Our free offer for the signals at thebirbness.com/bybit, where we have our official close partnership with Bybit, where there is an exchange of value, right? You have access to our premium profitable calls that are tested, proven, well, it's transparent. You can go and check it out. And proven to work in practice, and you can get them free thanks to our partnership with Bybit. So only thing you need to go is just go ahead and visit thebirbness.com/bybit. You're gonna get it all set up. God bless you all. See you around. Thanks for tuning in. It's been Adrian CryptoBirb as your host today. Bye-bye.